Well, 2018 is going to go down in history as one of the longest years of my life. Well, 365 days of trying to figure out how to become a better day trader. And I finally figured it out. On day 363, I finally figured out what I've been doing wrong for the last 2 years of my day trading journey. Gonna talk about it in this video, how I'm now rewiring my brain to fix this one very tiny flaw, but also a major flaw that has prevented me from making more money day trading, or at least being able to protect some of the profits that I have made and not have major losses. Gonna talk about it in this video, so make sure you stay tuned. Hey, what's going on, guys? Patrick here. Today I'm talking about this very, very simple idea. It's almost too simple to give away free on the internet, but I'm gonna do it. I'm gonna give away this very simple idea that I've recently discovered. It's not recent by any means, I've talked about it before, but I want to make a video that's dedicated to this very simple idea. And I keep saying it's a simple idea because it's going to sound really simple. You should always buy low, sell high. Ding, 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 ding. You can now pay $500 to learn more about day trading. I'm just kidding. I was one of those day traders who thought that the only way to capture momentum was to buy the breakout. Cha-ching! Every time a stock went higher, it would just keep going higher because I could just buy higher and it would just keep going higher. The resistance was at $3 and the stock was going higher. All I had to do was just buy at $3.01. And obviously I would make money because the stock broke through resistance and it's going higher to the moon. But what I figured out a lot of times was I was actually just getting dumped on over and over. And now I know exactly who was dumping on me in the first place. I know who you are. You bear people. Now, if you just listen to my 3 simple patterns that I've taught people around the world to trade with, somebody out there will pick that up. What it is this very simple pattern. What I do now is I'm looking for overextended stocks. If I'm buying the dip on an overextended move to the downside to support areas. And if I'm shorting into resistance on an overextended move. Say I'm buying a stock at $3 and I really want to buy it. It's $3. It just broke through that resistance. It's going higher. Now, what I'm doing, I'm asking myself, okay, first off, if the $3 area can't hold, I'm going to try to buy a little bit lower, like 286, maybe like 285. Look for that pullback. I want to see a quick little pullback, and I'm going to jump in at that point once I see buyers stepping in there. Now, it's not always as simple as that. You can't always nail the bottom perfectly on these small pullbacks, but what you can do is protect yourself a little bit better. Now, in the past, I was buying the breakouts over $3. I'd buy 301, 303, and all of a sudden the stock would drop to $2.80 and I would get out for a 20-cent loss. And what I've changed is instead of getting out for a 20-cent loss on that breakthrough resistance, I'm now buying 20 cents below that break, trying to get the best entry possible. And what this has allowed me to do is, first off, if the stock is now pulling back to that previous support area, that previous area on the chart that we've seen consolidation, we've seen some support bouncing. If it pulls back to that area, I'm getting in knowing that there is, support in that area. If I'm buying the resistance break, I'm just buying with the hope that the stock's gonna go higher and higher because I'm buying at $3 and I'm crossing my fingers, I'm praying that the stock is going to go to $3.20 possibly. But there's actually a much better chance that the stock is going to pull back through the whole dollar, through that $3 whole dollar resistance that was there previously. It's going to pull down through there, get down to like the 280 area, maybe 290s, and then it's going to bounce back through that resistance if the stock is strong. Now, this is not always going to happen exactly like that. It's not always going to be picture perfect. But what I'm doing is I'm asking myself, okay, we just broke through resistance. At that resistance area, I know there's gonna be some sellers, people taking profit, short sellers sitting there as well. Is the stock overextended? Where is the recent support? Where are the EMAs? I'm asking myself all of these questions before entering the trade, where in the past, I would just be like, it's going higher, the stock is going to the moon. If this stock breaks through the $3 resistance, I'm buying, no matter what. I'm going to buy the breakout, and I'm going to ride it to the moon. Well, you know what happens. Like I said, the stock breaks through the resistance and then it just pulls right back to the support where I could have gotten in anyway if I would have waited, if I would have had patience, if I would have just had a little bit more patience, and I would have understood the idea that stocks move in waves. The idea that a stock's gonna go up, it's gonna come down, it's gonna go up, it's gonna come down, it's gonna go up, it's gonna come down. Now people always ask me, how do you know if you're buying the support bounce or if you're buying the crash? Is the stock really overextended? Is it up 300, 500% on the day? What's the volume looking like? What's really going on here? Is it a big, strong move? Is there news? What is going on? Understanding what the move is, seeing the trend, and asking yourself, if this stock pulls back to the support area, is it going to continue to crash or is it going to find buyers? And that's going to just take time. You're going to learn that over time. You're going to be able to identify these opportunities a little bit better. But what I'm telling you here is that you should really focus on trying to buy these little dips, these little pullbacks. A pullback is simply when a stock goes up and then pulls back to the previous support area. If a stock goes from $4 to $5 all of a sudden, and there's previous support at $4, we're expecting that there's a possibility that the stock could pull back to $4, bounce there, and then continue higher. It's just kind of how it works. People are sitting at these key areas and they're waiting to see the bounce. The smart buyers, the day traders who are buying those support areas, the day traders who have patience are waiting to see these things add up. They're waiting to see the overall trend. They're waiting to see that support bounce. They're looking for different indicators before buying. 2019, the big thing for me is I'm buying either overextended stocks to the downside when they sell off on these moves up. Let's say the stock goes to $3.75, it holds $3.75 for a minute, and then it shoots to $4.15. In the past, I would have bought right at $4 for that break above $4, and the stock would have pulled back to probably $3.75 anyway to kind of bounce with that support, maybe make a higher low, and then head back higher. So instead of me buying at $4, I'm now trying to buy that little bit of a pullback to get a better entry, and it's going to reduce my risk. So if I'm buying 1,000 shares of a $4 stock, if I'm trying to buy it at $3.75 and my stop loss is at the $3.70 area, I'm only risking 5 cents because I know there's a little bit of support in that area. But if I'm buying the stock at $4.05, I'm now risking 30, 40 cents on my stop loss area anyway. So if I'm going to be entering a trade, I should be always asking myself, where is my stop loss? Where is the support? Where is the opportunity to get in safely and get out safely? Also, another thing I really like about, buying a small pullback is that even if a stock, is going higher and higher and higher and it bounces and I buy a little bit of a pullback, maybe it doesn't go all the way back to high of day. Maybe it just, bounces off that support, kind of gets denied, then starts to go lower. If I can identify that there's resistance pulling up, if I can identify that we're not making a new high, at least at that point, I can take a small profit. I can get out for a 10-cent gain, where in the past, I would have gotten out for a 20-cent loss. Now I'm getting out of a trade for a 10 cents profit instead of getting out for a 20-cent loss. I know this all might just sound crazy right now because I'm not showing you on the charts and all that. If I was previously buying at $4 and I had my stop loss at $3.70, I'm risking 30 cents. So if I have 1,000 shares, that's a $300 loss. Now, the same exact stock that I would have bought at $4 with my new idea, with my new understanding of buying the dip, of buying the bottom of the wave, I'm now buying at $3.75 and I'm risking 5 cents for the same exact trade, and I'm having a much better upside as well. So instead of risking 30 cents, I'm risking 5 cents for the possibility of making 60 cents on the same exact trade. So you can see the overall idea here is not just about making more money, it's just about reducing risk. But also, if the stock does pull back that support, I'm thinking best case scenario, we're going to get a little bit of a bounce back, maybe to that $4 area, and I'm still up 25 cents. If the stock doesn't break through $4 again, I then know that there's resistance, there's trouble. I can get out for a small profit. Where in the past, I was getting out for a small loss on the same exact trade. And that's really going to be the biggest game changer for my day trading currently. That's really going to help me become a better day trader, understanding that I should be buying these little pullbacks or selling into the overextended part of the stock. I know it sounds really, really simple, and like people are probably like, well, I've already known this, Patrick. I've been telling you this for years. Why would you not have listened to me 5 years ago? You know, sometimes you just gotta learn the hard way, and I learned the hard way. I'm not afraid to admit it, that buying the breakout isn't the best opportunity. Now, like I said, you have to kind of learn how these stocks move. You can't just always try to buy the dip. You got to be able to identify the support, identify the overall trend. I like to buy that first, maybe second pullback. I'm not trying to buy the 10th or the 30th pullback. I'm looking for opportunities. I'm aligning everything. You know, correlations are king here. And that's really what I'm looking for. Same idea. If I'm going short on a stock, what am I doing? I'm shorting as the stock gets really overextended to the upside into resistance in the same exact short that I would have taken in the past. Let's say the stock goes from $12 to $13 very quickly, and it just has one big green candle. And all I see is how overextended it is. And I see that there's previous resistance at the $13 area. In the past, what I probably would have done is I would have waited for it to spike, and then I would have waited for it to start to crash, and I would have shorted at $12, and I would have missed out on all that opportunity anyway. Really what I'm doing here is I'm minimizing the risk for the trade, and then I'm maximizing the reward. The same exact trade that you would have taken in the past, if you think about it, buying the breakout or just buying an overextended stock, if you're buying the pullback, if you're buying as the stock pulls back from resistance, you're buying that area, you're going to be able to capitalize on that move back above the resistance. So a lot of times these stocks get stuck at the whole dollar area, you know, that $3 whole dollar support. We get that little pullback down there to the 280s, and then we push through $3 and we go to 320. So buying the breakout over $3 would get you 19 cents in profit. Buying the pullback is going to get me 40 cents in profit, only risking, you know, 5-10 cents, where me trying to buy the breakout, I'm risking 20 to 30 cents for the same reward. We're buying the small dip as the stock is trending higher. But we're making sure that, you know, it's a higher low, higher low, higher low. So we're not just buying the big crash. You know, we're really waiting for the opportunity. The volume is important. We want to see that there's some news, people buying. We're not just buying any stock and every stock that's just pulling back. We're looking for those small pullbacks to get long, and then we're looking to capitalize on that move higher. So hopefully you can see here how excited I am to finally realize that I've been kind of working on this for the last couple of months. You know, you might have seen my trading the last 3 or 4 months, trying to really capitalize on this idea of buying the dip more, you know, not buying stock when it's really overextended. These are just things that you're going to learn over time. When you first start trading, you're going to learn that it's not as easy as it seems just because you see the ads on YouTube talking about making thousands and thousands of dollars. It's just not that simple. But the big thing to focus on here is just, you know, learning how these stocks are moving and seeing those patterns, seeing how these stocks are like, ooh, I've seen this before. I've seen the same exact setup. I've seen this bull flag and how it's exploded to the upside. I've seen everything before. You're going to be able to identify these patterns and see things as they're happening, and then you're going to be able to execute profitable trades while doing that. And that's going to be my laser focus in 2019, is really just being able to capitalize on momentum, but not being the guy who's buying at the top. I'm not buying any more tops. No thank you, no thank you. I do not want to be that guy anymore. I'm buying stocks that are overextended to the downside on a little bit of a pullback, back to the support area. I'm looking for that nice big dip, and then I'm shorting into that nice big spike. Real simple, really easy. All I'm doing is I'm minimizing my risk and maximizing my reward by this one simple idea that stocks move in waves, baby, move in waves. But there it is. I'll talk to you guys later on. If you haven't already, do me one big favor, hit that subscribe button. It's somewhere. Over there.